Today I'm going to talk about some updates on how I will manage my cash holdings as interest rates start coming down. The big news in the past week is that the chair of the Federal Reserve, Jerome Powell, has indicated that interest rate cuts are finally coming, and this can only mean that interest rates will be coming down. How much is anyone's guess, but according to CNBC, traders are expecting at least 0.25% point reduction in September, and in any case, we have already seen interest rates coming down in recent months. Bank accounts like UOB One and Bonus Saver have reduced interest rates, and recent 6-month T-bills have closed at 3.4% and even 3.34% per annum. It's quite certain that rates are just going to go down from here. Here are a few things I'm going to do, and while I hope this video will be useful to you, as usual, this is not financial advice, so please exercise your own discretion when making any financial decision. Also, things can change quite rapidly, so I'll encourage you to join more than 21,000 subscribers on my Telegram to stay informed of important updates. Generally, I split my money into 3 pots: emergency funds, short-term funds, medium-term to long-term funds. And here is how I'm going to allocate my money across these categories. The first thing I'm going to do is to increase my holdings in Singapore Savings Bond. For a while now, I haven't really been subscribing to SSB because it has been giving relatively weak rates of around 3% per annum. And given the fact that SSB has been undersubscribed many times in the past year or so, right, I'm not the only one who thinks that the rates are weak. Now, a couple months ago, however, I put $20,000 into June 2024 SSB, which was giving around 3.26 to 3.33% per annum average returns, depending on how long you hold the bond for. Now, this month's SSB isn't as attractive, but it is at least 3.06% per annum, and with the latest 6-month T-bill and fixed deposit rates at around 3.5% per annum, and bank accounts with all sorts of requirements only giving around 4% per annum, I feel that the gap between those instruments and SSBs has converged to a point where putting funds into SSB makes sense. Now, I know that bank accounts like OCBC 360 can still give 4.6% per annum return, and even UB1 still gives 4% per annum for 150,000 savings. But these probably won't hold for long if interest rates continue to slide. Would you want 4% plus per annum savings for however long it lasts, or do you want 3% per annum that is guaranteed for as long as 10 years? Right, personally, I'm going to channel more of my savings towards the latter, which is SSB. August is perhaps the last time we will see SSB giving above 3% per annum returns for a long while, so I'm going to take the chance to allocate roughly 9 to 10 months worth of expenses to emergency savings, and I'll put them into SSB. Now, I might even put more than I think I need, because putting too much into SSB is something that's reversible because of how liquid SSB is. But if this tranche is over and then the next tranche is under 3% per annum, yeah, we might probably not be able to get above 3% per annum rates for SSB in a long while. Do take note that for September 2024's SSB, you have until 27th August 9 PM to subscribe, which is only a couple of days from the publishing of this video. For myself, I think SSB is the perfect place for emergency savings because these are funds that are not touched in normal circumstances. So leaving it in SSB, which gives its return for 10 years, is quite ideal. Right? I will still hold at least 2 to 3 months worth of liquidity in cash because SSB only allows withdrawals at the start of each month. So there might be occasions where you have to wait a few weeks for the funds to come out, and that's really too slow for certain emergencies. So you still need liquid cash savings. And in total, that's about 1 year's worth of expenses in emergency savings. And while that might sound like quite a lot, right? Some people only keep 6 to even 3 months, right? I don't actually spend all that much, so the absolute number can be relatively low. Moving on, money in my short-term goals like upcoming vacation plans should be quite minimal since this can come out from my active income. However, I foresee a larger outlay because I want to buy a new place. Okay, first, I do need to sell my current apartment, which I have been meaning to do so for a while now, but because I refinanced in 2022 at a really nice rate of around 1.45%, and with mortgage rates so high over the past couple of years, it didn't feel as palatable buying a new apartment with a much higher mortgage and giving up my low mortgage rate. Now that it seems likely that mortgage rates will come down a bit, plus the fact that my low fixed rate is expiring, I think it's also timely for me to sell off my current place. And I'll talk more about this separately, so subscribe to my Telegram for more updates. Though rates are coming down, there are still quite a lot of attractive promos to take advantage of, like trading app and bank promos. Short-term funds are perfect for such things. Chocolate Finance currently gives a decent 4.2% per annum rate. HSBC EJ is offering up to 4.6% per annum, and trading apps like Tiger Brokers and Moomoo have been offering guaranteed returns for new users. Good places to store savings and promos happen from time to time, and I regularly broadcast such deals to my Telegram, so subscribe if you want to be updated. Now, because I want to buy an apartment in the near future, I will need to put aside quite a little bit of money into these short-term savings promos, and I'll break down the costs later in this video. After allocating my funds for emergency cash as well as my short-term goals, it's time to look at the medium to long-term goals. For funds that I don't need to touch for at least 5 years or longer, I will put more of such funds towards investments. With interest rates as high as they were in the past couple of years, I think I have been hoarding too much cash. Like many, I think I have been quite drunk on chasing all the 4 to 5% per annum bank accounts and other cash management options. As good as very low risk 4 to 5% per annum is, it barely hedged against inflation, which has been around the same rate in recent years. Thankfully, at the same time, I have indeed been investing quite a bit over the years and have good returns there too. This is perhaps hindsight talking, but I do kick myself for being too cash heavy in recent years. Moving forward, I need to allocate more funds towards my investments, and rates coming down for cash is perhaps a blessing in disguise, since it will be a very good motivation for me to invest more for my long-term goals. As for what to invest in, I think this is a whole other topic on its own, so I will talk about this in future pieces. Again, definitely subscribe for updates. So in all, this is likely the direction how my cash is going to be allocated. For emergency funds, depending on my mortgage for my next place, I think anywhere between $50,000 to $100,000 will be sufficient. So about 25% of that will be held in cash and 75% in Singapore savings bonds. For short-term funds, I really haven't started serious property hunting yet, but I'm going to set aside things for down payment, stamp duty, and perhaps some rental costs. For $1 million property, that's $250,000 of down payment, roughly $28,000 for stamp duty and legal costs, and maybe $50,000 for reno. For $1.5 million property, it's $375,000 for down payment, roughly $48,000 for stamp duty and legal costs, and maybe also the same $50,000 for reno. So that's anywhere between $328,000 to $473,000 in cost for my next property. And after selling my current apartment and paying off the outstanding mortgage, I should net probably around $300,000 from the sale. This means that I need at least $28,000 to $173,000 in my short-term funds, depending on the kind of property I'm buying. $100,000 for emergency cash and $173,000 for short-term funds means I should not have more than $273,000 of cash and cash equivalents, so anything beyond that will be channeled towards investing. Now, investing is a whole big topic on its own, so I'll touch on that in future pieces. Again, many things can change very quickly, so join the Telegram if you want to get the best savings deals and get ways to earn more from your credit cards, savings accounts, etc. And check out this video where I previously talked about how much cash I have. Let me know in the comments below if you want an update to how much the funds is, and I'll see you in that video. Hi Kylo, maybe you'd like to buy over the apartment? You've been staying here rent-free for 4 years now. Maybe it's time for you to chip in.